You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 4th day of May, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. This is our second live broadcast for today. And tonight at 8 p.m. Eastern will be our members only workshop. So if you have been on the trial and you've not yet become a lifetime member with no recurring fees, no upsells, and no nonsense, go here, eminifuturestrading.com, get your passport today so you can be in the members only workshop tonight. Now, from 9:30 a.m. to 11:30 a.m. Eastern, that 2-hour broadcast is our live training room. That is reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial yet, you can do so by simply going to mytradingiq.com. At the top of the page, there's a button that says free trial. All you have to do is click it, follow the instructions. Doesn't matter what day of the week or hour of the day or weekend that you sign up for the trial, you'll get 5 consecutive days where you not only have access to the live training room 2 hours a day, but you also have access to all of the resources that all of our lifetime members have access to, except for the members only workshop on Thursday night. That's 5 consecutive trading days, no matter what day you start. Now, we take a 30-minute break at the end of the live training room, and we come back at 12 noon Eastern for this broadcast. This broadcast is open to the public. It's everybody everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways to join the afternoon broadcast live. The best way, and you only have to do this once, go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and you're done. Going forward, every trading day, you'll get an email about an hour before this broadcast starts. In that email, there's a link. 12 noon Eastern, all you have to do is click the link in the email. It will automatically log you into our platform, and doing it that way gives you access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join the afternoon broadcast live. Just point your browser to our YouTube channel. And there'll be days where you just simply can't make it. That's okay. Not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. Now, the YouTube channel is easy to remember, youtube.com/CFRN. youtube.com/CFRN. And for those who are new to the world of CFRN, it's a great way to find out who we really are. Anybody can say anything today, but I encourage you to scroll back 6 weeks, 6 months, a year, 2 years, more, and just pick a couple days at random. Fast forward to the part where Michael's doing the recap of the live training room. Fast forward to the part where I'm doing the recap of the alerts. And pretty quickly, you'll see that thread of connectivity and continuity that's woven through each and every daily broadcast. youtube.com/CFRN. Let's open with a word of prayer as we do every day. Now, for the last week, we've been talking about a topic. My story, God's glory. Today's scripture is Luke 15, chapter 15, verses 11 through 24. Now, for most of you, this is going to be a parable that you're very familiar with. I'll be sharing from the Message translation, so it might sound a little different than what you grew up with in Sunday school in the King James Version. Then he said, "There was once a man who had 2 sons. The younger said to his father, 'Father, I want right now what's coming to me.' In my household, I would have gotten a backhand and, well, that would have been the end of it. But not here, not in this story, not in this parable. So the father divided the property between them. It wasn't long before the younger son packed his bags and left for a distant country. There, undisciplined and dissipated, he wasted everything he had. After he had gone through all of his money, there was a bad famine all through that country, and he began to feel it. He signed on with a citizen there who assigned him to his fields to slop the pigs. Unless you're from the South, you may have never heard that term, slopping the pigs, but it's when you feed them. He was so hungry, he would have eaten the corn cobs in the pig slop, but no one would give him any. That brought him to his senses. He said, 'All those farmhands working for my father sit down to 3 meals a day, and here I am starving to death. I'm going back to my father. I'll say to him, Father, I've sinned against God. I've sinned before you. I don't even deserve to be called your son. Take me on as a hired hand.' He got right up and went home to his father. When he was still a long way off, his father saw him. His heart pounding, he ran out, embraced him, and kissed him. The son started his speech that he had prepared. 'Father, I've sinned against God. I've sinned before you. I don't deserve to be called your son ever again.' But the father wasn't listening. He was calling to the servants. 'Quick, Bring a clean set of clothes and dress him. Put the family ring on his finger and sandals on his feet. Then get a prize-winning heifer and roast it. We're going to feast. We're going to have a wonderful time. My son is here, given up for dead, and now alive, given up for lost, and now found. And they began to have a wonderful time. Except for the other brother who wasn't very happy, and that's a story for another day. Now, I'm pretty good at making messes, ask my wife. But even when I do make a mess, she refuses to let our house stay a mess. My ability to make a mess goes beyond laundry. Life can get messy, and if left to my own devices, I can land myself in a mess of a situation. The Bible is filled with stories of people who are good at making messes too. The woman caught in the mess of adultery, Zacchaeus in a mess of lies and dishonesty, David caught in a mess of temptation and sin, Jonah in a mess because he ran from God's calling. The list of mess makers in Scripture is long. And you and I are no different. Do you have any messes in your life? Poor decisions, addiction, adultery, dishonest dealings, lying, secret sins, pride, anger. Not really a betting man, but I'm willing to bet that there might be at least one mess you've got into at some point in your life that you're unsure how to clean up. Take comfort in discovering that in the Bible, God did not allow any of these people to stay in their messes and be destroyed. He's not willing to leave you in your mess either. You might think, yeah, but you don't know the things I've done, the life I've lived. No, I don't. But God does. And if you come before Him with a broken and contrite spirit, He is quick and just to forgive. Here are 3 things you can do when you find yourself in a mess. No matter what kind of mess it is, how big it is. Number 1, realize that God sees you and that nothing is impossible with Him. Luke 1:37 says it straight up. With God, nothing is impossible. Which leads us to number 2. Be willing to surrender your mess. 1 John 1:9 says, if we confess our sins, He is faithful and just and will forgive our sins and purify us from all unrighteousness. Number 3, now this is the real important one. Be willing to leave your mess behind. Jesus' message to the woman caught in adultery was this: neither do I condemn you. Go and sin no more. John 8:11. Fern Bernstein wrote this: only God can turn a mess into a message, a test into a testimony, a trial into a triumph, and a victim into a victor. God sees your mess. He's not scared of it. And He refuses to let you stay in the middle of it. Ultimately, He can and will deliver you. Moreover, He can use your mess to proclaim His message of love and deliverance. Nothing is wasted when it is placed in God's hands. Even the messy parts of your story can give God glory. Join me in a word of prayer. Heavenly Father, as we come before you today, we want to thank you for your love and for your never-ending grace. We thank you for the story of the prodigal son in Luke 15, which reminds us of the depth of your love for us and the extent of your mercy. Like the prodigal son, we confess that we have often turned away from you and squandered the blessings you have given us. We have sinned against you and against heaven, and we are not worthy to be called your children. But we thank you that, like the father in the parable, you are waiting for us with open arms. You welcome us back into your family and restore us to your love and your grace. You clothe us in the righteousness of Christ and celebrate our return with great joy. We ask for your forgiveness for our sins and for the times we have wandered away from you. We ask that you would help us to turn away from our sin and to return to you with all of our hearts. May we always remember the depth of your love for us, and may we share that love with others. Help us to be agents of your grace, bringing hope and healing to those who have strayed from you. Thank you for your love and your mercy, and for the gift of salvation through your Son, Jesus Christ. It's in His name we believe and pray, and everybody said amen. Now, if you're tuned in today via the YouTube channel, you already know the topic of today's episode: automated trading systems. Why do they fail to provide consistent results? I mean, we've all dreamed of it. We've all fantasized about it. We've always wanted to have that black box that we could just turn on and go do our thing, and it would just, print $100 bills for us. Brother, that's not going to happen. Okay? Show me one consistently profitable automated trading system, and I'll buy it for you. Let that sink in. Now, we're going to talk about that in a minute. But first, I'm going to give you the numbers from around the world. Put everything in context. I'm going to start here in the U.S. with the cash markets, or the indices, as they're called. Currently, the Dow is down 386 points. That's a little over 1%. NASDAQ is down 48 points. S&P 500 is down 30 points. And the Russell 2000, our man in the street, is down 32 points. Now for the Russell, that's a drop of almost 2%. In the commodity basket, crude oil is up 13 cents, trading 68.74 last. Gold up $24.60, trading 2,061.70 last. It's a gain of 1.25%. Silver up 58 cents, trading 26.26 last. That's a gain of 2.25%. I should remind you that when the price of silver moves $1 in either direction, that has a value of $5,000 per contract traded. Just a $1 move. And we're currently up 58 cents on the session, so that's over $2,500 per contract traded. In the Asian markets at the close, Nikkei up 34 points, Shanghai up 27 points, and Hang Seng up 249 points, which is a gain of a 1.25%. In the European markets at the close, FTSE down 85, DAX down 80, CAC down 63. So that gave us a green day in Asia. It was a red day for the UK. And so far, it is a big red radio Thursday here in the US of A. So, those are the numbers from around the world. Now let's talk for a moment about these automated trading programs. You get emails all the time. You're Googling at night till your fingers bleed. You end up on these websites filled with empty promises. It's not possible. That's why I have no problem making the statement I made earlier. You show me a system. Now, our spreadsheet that Michael shows you every day has got a 10-year history. Show me any automated trading system that has even a 3-year consistently profitable history, and I'll buy it for you out of my own pocket. Okay? Automated trading programs, also known as algorithmic trading or algo trading, have become increasingly popular in recent years. These programs use complex algorithms and mathematical models to analyze market data and execute trades automatically. While automated trading programs can be useful tools for traders, they do not always produce consistent positive results. In the next few minutes, we'll explore some of the reasons why automated trading programs fail to produce consistent positive results. First, automated trading programs are only as good as the algorithm and data they are based on. The algorithm must be well designed and rigorously tested, and the data must be accurate and up to date. If the algorithm is flawed or the data is inaccurate, the trading program will not be able to make accurate predictions and execute profitable trades. Not over the long haul. Second, automated trading programs can be vulnerable to market volatility and unexpected events. You saw what happened yesterday when the Fed announcement came out, right? Market ran up, market ran down. So you go buy some automated trading system. It doesn't know that yesterday was Fed day. It doesn't know that there's going to be extreme volatility and that it should just simply stay out of the market. You say, well, maybe somebody could program that in too to, not execute trades on Fed day. I mean, we could go down a million different rabbit holes, but I'm just trying to tell you, you got to learn how to trade, okay? If there is any sudden news event that causes a sharp price movement, now, a Fed announcement, we know to the day and to the hour when the next Fed meeting will be. Years in advance. But breaking news, as they call it, are all these minor economic reports which create high volatility. Well, there's just no way to factor those all in. The program, no matter how solid the algorithm, simply cannot react quickly enough to avoid losses because it doesn't understand what's happening. Similarly, if there is a glitch in the software or a problem with the trading platform, the program may not be able to execute trades as intended or get you out of the market before all the money is drained out of your account. That's why you never hear us preaching about set it and forget it. We provide you with, Logic 247 alerts, concierge trade alerts, but I've never once encouraged you to just set it and forget it. Understand it, trade based upon the window of opportunity that the alert represents, but you stay there with it until you reach your goal for the day. And then, what do? Put your mouse away. Number 3, automated trading programs are often subject to curve fitting data. This occurs when the algorithm is too complex and too closely tailored to recent historical data, leading to poor performance when applied to new data. Curve fitting, overfitting can occur when the program is back-tested using historical data, but then fails to perform well in real-world trading conditions. It's simple to cherry-pick the great days when the automated program knocked it out of the park, but you don't ever hear anybody talking about the days it couldn't even get off home plate. Fourth, automated trading programs fail to account for human factors, such as market sentiment and investor and trader behavior. Markets are not always rational, and emotions can play a significant role in price movement. Automated trading programs cannot monitor human emotion. They can't capture these nuances, and as a result, fail to perform over time as expected. Don't get me wrong, like I said at the beginning, it's a great idea. We've all dreamed of it, fantasized of it. Some of us have even spent a lot of time trying to create such an animal. Okay? I'm glad those days are behind me. Bottom line, automated trading programs are subject to the limitations of the technology and infrastructure used to develop and run them. These programs may be dependent on high-speed data feeds and low-latency connections. You've heard about co-locating your server next to the exchange so that you can get that millisecond jump on the trader in Tennessee or Texas or California. That gets really expensive real quick. Additionally, these automated programs are vulnerable to cybersecurity threats such as hacking or data breaches. Imagine hacking into an algorithm that has thousands of subscribers and getting it to send the wrong signal. So everybody's going long as you, the hacker, reap the benefits of a falling market. Automated trading programs, again, they can be powerful tools for traders, but they're far from foolproof. Flawed algorithms, inaccurate data, unexpected events, overfitting, curve fitting, human factors, and technological limitations all contribute to poor performance. To maximize the effectiveness of an automated trading program, traders should learn how to trade. Because you know when there's an important economic report. You know when there's breaking news. You know when it's Fed day. There's all kinds of things that this computer program cannot and will not know. It's important to recognize that automated trading programs can be used as part of a broader trading strategy rather than a standalone solution. In other words, you learn how to trade, and if the computer algorithm happens to agree with what you see live in real time, but again, how much money do you want to spend to make a couple points a day in the S&P? Or 10 ticks in crude, or 10 ticks in gold? That's all you need to build a consistently profitable trading business. If you can learn to consistently take 2 points a day out of the S&P, at one contract, that's $100 a day. Not too exciting. But as you earn the right to trade additional contracts and fund additional contracts with profits you earn in the market, by the time you hit 10 contracts, those same 2 points are now worth $1,000 a day. It's $250,000 a year, puts you in the top 3% of wage earners worldwide. The best solution, the simplest solution, the most cost-effective solution is simply learn how to trade. And that's exactly what we do every trading day, not only in the live training room, but in the unlimited one-on-one mentoring sessions and in the workshops on Thursday night. We teach you how to trade. We want you to become self-sufficient. We don't want you to be dependent upon someone to tell you when to get in and when to get out for the rest of your life. You don't want that either. You want to be able to look at a chart across multiple time frames. The chart will tell you when to get in or when to take profit. And you can repeat that process over and over, again and again, day after day. You're not going to get rich overnight. You may never drive a Bentley. They may never write a book or make a movie about what an awesome trader you were. But you can not only earn an above average living, you can have the freedom to live and work anywhere on planet Earth that has a reliable, high-speed internet connection. So with that said, ultimately you'll have to make up your own mind. You now know my thoughts on the subject, whatever that's worth. We're in week 248. We've now issued over 14,000 individual handcrafted alerts over the last 248 weeks. Now, Valerie did this recap this morning at 7 a.m. Eastern. There have been some changes since then. But here's where we stood at 7 a.m. Since the markets opened this week, Sunday night at 6 p.m. Eastern, through 7 a.m. this morning, we had issued a total of 35 alerts. One never triggered. We were still waiting on the outcome of 7. So we had 27 actionable alerts, of which 4, or 15%, would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. There is a caveat. Never risk more than the potential profit in the trade. Now, I said already the maximum risk is $300, but that's only if the alert offers $300 of profit potential, or you plan to stay in the trade. Let's say the alert has $1,000 of potential profit from the entry to the final target, but you know you're going to jump out at the initial target, which is $100 per contract. Then you don't want to risk more than that, okay? Bad math, bad science. You're going to stick in, to the $300 level, then you can risk $300. On the S&P, that's 6 points at $50 a point. Now, let's say you get into a trade and you plan to stay in till you have $300 in profit. But in the midst of the trade, something on your smaller time frame tells you the market just switched directions. You better get out. Scratch out. If you've got some profit, take it. If you're in the red, don't want it to get any more red, do you? Just get out. There'll always be another trade that comes along. You don't ever have to worry about the fear of missing out, or FOMO as it's called. Over the last 248 weeks, we've averaged 20% or less of the alerts being stopped out based on the risk profile and caveat I just explained. Now, our original alert service is different in a couple of different ways. Let me show you what I mean. Logic 247 alerts are based on current price action and come out around the clock. Futures trade around the clock. We have traders around the globe. So an alert can come out at 2 a.m. or 2 p.m. Unlike the concierge trade alerts, which are published shortly after the Globex open every evening, Sunday through Thursday. Okay? So what do you do with these numbers when this report comes out? Okay, it's all the same markets. First thing you do is you make note, we'll use the ES as an example, where's price at the time the report's published? It's always going to be between these two numbers. So make a note on your 30-minute chart where price is at that time. Draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Keeps you from buying in a downtrend or selling in an uptrend kind of thing. When we go to my charts a little later, you'll see what my lines in the sand look like. Michael should be joining us here pretty quickly, a couple minutes. So once you've done all the things I just said, now here's how you trade the CTAs. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's that simple. You always have to look left to spot potential obstacles to reaching the target. It can be a previous swing high or swing low, which becomes potential support or resistance. And over time, you will learn how price behaves at a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is trying to get to a weekly trading zone. On your 30-minute chart, if price is above the BBC, it's trying to get to the zone overhead. If price is below the 30-minute BBC, it's trying to get to the zone below. You must resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, this broadcast is open to the public, so unless you're a member or a trial member, you didn't get these targets last night at 6:40 p.m. Eastern. But you can take a screenshot right now, because we are going to walk through each and every individual market and see what happened. Now, Michael should be joining us any minute. As far as I know, I haven't heard different. Daily chart of the S&P, that's where we start. We want to know which way the wind is blowing. Okay? These fibs are, we've been in a downtrend over a year. The low of the downtrend was put in October 13th. The high was put in February 2nd. And over here, we questioned if this was a head fake, and then we extended it because blue and climbing was above price, you know. Okay, so it's kind of still looking like a head fake. And I questioned last night, is there such a thing as a double top head fake? Now that I think about it, we're really looking at a triple top head fake. And the question that's been on my daily chart for weeks, are we dealing with a major head fake? When I was just about ready to take this down and go, I guess not, then this happened. And then yesterday happened. But more importantly, today happened. And my headphones just fell off. Okay. So where are we? We have traded below the 24% fib retracement. We're off the low of the day. We're certainly well off the high of the session. Okay. Price is just off the low of the session. Now, institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So by starting your trading session, no matter what market it is you trade, okay, it doesn't have to be the S&P, it can be an individual stock, a crypto, a forex pair. If you'll spend a couple minutes with the daily chart, you'll see which way the wind's blowing, because it is the institutional traders that move price because of their account size. Their accounts are denominated in hundreds of millions and billions of dollars. Typical retail trader has an account denominated in thousands or tens of thousands of dollars. So the institutional traders move price. So we don't have to outsmart them or outfox them. We simply have to clearly understand what they're doing or not doing. Now, at the low of the day, buyers came in and drove us up, but they haven't had a whole lot of success in moving us back to the high of the session. Above the high of the session, we've got a conglomeration of resistance. The daily BBC, the daily step line, and daily red and falling. So take a lot of buying pressure to get through that. Path of least resistance is to the low of the day, and then right here where the previous bullish cross took place. It's about 40.15. You could call it, 40.14, 40.15. It's an area right there where the blue line crossed the green line. When a bullish cross leads to an extended move, the first time price revisits that area, it will almost always be good support, at least the first time down. So we come down to this area. If that's how it turns out, we catch a bounce, and then we get another leg down, and then we have potential support at the 38% retracement, and then this low, and then the 50%. Okay, Michael is here, so we're going to pause with the recap of the alerts, and once he gives us a recap of the live training room, and we trade in 30 minutes today on TradingView?
We are indeed.
Okay, so once that's all done, then I'll come back and we'll walk through each individual market, take a look at the 30-minute charts, which is what all the alerts are based on. Michael?
All right, here it comes there.
Okay, looks good.
All right, here we go. Good afternoon, everyone. Today is Thursday, the 4th day of May 2023. The 4th day of May 2023. If you have not taken a free trial, let's go here to mytradingiq.com, and right here it says sign up for your free 5-day training now, 9:30 to 11:30 Eastern time. We do that every day, 9:30 to 11:30 Eastern time. We've been doing it for over 10 years, 9:30 to 11:30 Eastern time. Click on that, and then if you're going to take the trial, you should download the charting platform. That is good for you. We use DT Pro and TradingView primarily. You also have NinjaTrader available to you down here. If you have NinjaTrader, you just need to give us your machine ID. What I'm about to show you is going to be mostly on TradingView, but I do all my trading on DT Pro. This is where I trade. All right, TradingView is a charting platform. DT Pro is a charting and trading platform. NinjaTrader is a charting and trading platform. But TradingView is just charting, and they have the goods when it comes to the charts. So look at the spreadsheet really quick too. Let me start this over again. It looks like I got all the way up there to the top of the spreadsheet. Let me go all the way down to the bottom. Here it is. All right. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. On the NQ, we made 86 ticks today. On the crude, we made 8. On gold, we lost 9. And on the ES, we made 4. That puts $470 a contract. Today it took 3 minutes and 2 trades to get to $800, and we took a total of 17 trades this morning. So on a month now, we're at $1,470. That's over 4 trading days, averaging $367 per contract for 2-hour trading day. We've gotten our goal on 83 out of 85 days, and we've gone 10 days since our last non-green day, 432 business days since our last red day. 432 business days. Can you imagine that? That is almost a year and a half. On the year now, we're at $42,515. Over 85 days, averaging $500 per contract per 2-hour business day. If you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, and so far this year, you would have only had to work 22.98 hours or 23 hours getting your goal for the day. And you would have averaged $1,364 per hour while you were doing all that. Okay? All right. Now, let's get into the actual trading. Here we go. On the gold, look at these nice trades. They just look perfect right there, don't they? Except for that one. Bing, bing, bing. Bing, bing. All right. Anyway, let's get into why you should have taken those and why you shouldn't have taken those. All right. We'll start it here at the beginning. We didn't have that many trades today. And as a matter of fact, on gold, we didn't have any trades. Oh, wait a minute. That's not the right one. Yes, we did have trades on gold. On gold, we stopped out. Okay. Go back to the very beginning. Here it was. Our very first trade was right here on gold. We ended up with one tick. Then we took the next one right here, and I stopped out. That put us at -9. We only had one more trade over here that we actually took, and we had a break even on that one. There were no other trades that we took. I don't know what happened right here, but something happened because we had a gap up there, and we had gaps on the ES, and the NQ as well at the same time. During the training this morning, I was putting on some paper trades in here. You can see right there. I have this connected to the paper trading account right now. But there were some more opportunities in here, and these were random trades that I was putting on, not actual trades. Well, that one was an actual trade, but the other ones were random. That was pretty much it for the gold. We had another gap situation right here that was unexpected. Then we wanted to see that gap get filled, and I don't see that it did get filled completely. But going through here, we had another shorting opportunity in here. It got all flat right here getting toward the end of the session, got all flat in there. Then we had a shorting opportunity in here, and another one there, and another one there. All would have worked out just fine. This one would have stopped you out. And we wouldn't have done anything through here until we had a deeper pullback like this one. This one would have been a break-even trade for me had I done it. This would have been okay. This would have been okay. This, it probably would have stopped out. It looks like it went just 4 ticks into profit, but I probably wouldn't have gotten in at exactly the right place. This, we would have traded off the ribbon here, I think, and not taken the arrow. I would have had it already off the ribbon. This would have been an okay trade, and this one we would not have taken because we didn't put in a lower swing. This would have been a nice trade. It's at the swing high right now. It should exceed the swing high if it's going to continue the trend. That was the morning with gold. We ended up with -9 ticks. Okay. Let's see what time is it? 12:55. So I have 5 minutes to get through these other markets. So that's gold again. On the crude oil right here. Let's go back to the beginning of crude. We didn't have a ton on crude either, did we? No, we had this one trade right here. We got 8 ticks on. That was all that we did with crude oil. There were some decent trades in there, but none that I was getting. Looks like all these were giving us these double shots, one after another. I don't know. Crude is, well, right here was doing a direction change. We're getting the deep pullback right now after the direction change. So we're going to have a ribbon trade right here. If we get a down close on this, we're not going to get an arrow because this is not overbought. But if we get a down close here, we'd off the ribbon, a down close. Okay. So that would be a ribbon change right there. I mean, a ribbon trade. On the ES, we had a few trades today. There's 2 of them. There's 3. That's the third one right there, I think. Yeah, that was it. Oops. Let me do that. On the ES, right here was the very first trade on the ES. We got 1 tick on that one. And it got really sideways in here, but we didn't do anything. I didn't do anything all through here. And then we finally get over here, and I got 2 ticks on that one. And 1 more tick on this one. So I wasn't getting any follow through on the ES trades. It looks like during the break right here, there were a couple of trades that did follow through. I don't know how I would have ended up on those trades exactly. This probably would have been a break even. This probably would have given me a little bit of profit. This I wouldn't have taken, and this one looks like it would have given a little bit of profit. And that was the ES today. So we ended up with +4 on the ES. And now the NQ, as usual, is one we traded the most on. So I will go backwards on the NQ using these keys, because that's faster than trying to drag it all over, usually. I wonder if it goes faster if I put it over here. Not really. Anyway, on the NQ, we're just about to the beginning. There we are. Our first trade on the NQ was right here, and we picked up 30 ticks. That is where we got the goal for the day. All right, we had 1 + 1 on the gold, and then we had a plus 30 right there on the NQ. That is where we got the goal. And then the very next trade, we gave back 20 ticks. It did end up going in the direction we wanted it to go, but we took this one right here, and it didn't quite go far enough to get to the break even. And it pulled back, and then it went down and did everything it should have done. We took the follow-up trade right after that, and we got a break even on that. We took the next trade over here, and we went from 30 down to 10. Then we got another 30 ticks right here, so we got our 30 ticks back, and went back to 40 right there. And then we stopped out again. We went from, oh, this was just not a full stop. This was just a 1 tick stop out. It bumped it to break even to minus a tick when I got in the trade. And so it stopped me out minus 1 tick. It put us down to 39. Then the next trade, a little while later, we got 4 ticks here to get us to 43. Then we went from 43, we had a break even. Then we had a plus 12, went up to 55. Then here we had a plus 30. We went up to 85. And then we didn't do anything for a little while. We got into the training this morning, and we didn't do anything for a little while. And you get all the way over here. We had 1 more trade right here. 2 more trades, I guess, but we had this one right here where I got 1 tick to go to 86, and this one I had a break even on. And that was it. It got really flat at the end of the morning session. During the break, after it broke out of the flat stuff, I wouldn't have done that because it didn't pull back deep enough. I might have skipped that one too. It wasn't really given a whole bunch of stuff from deeper pullbacks. Right in here is probably where I would have started trading, but maybe not because we didn't put in any higher swings there. I probably might not have traded at all. We'll see, because now in about a minute we start the next part of this, where if you were to go out to TradingView, TradingView.com, and go to community live streams. In here, we are right down here at the bottom. If you click that right now, we're about to start that live stream right now. If you have not taken a free trial with us and you want to take a free trial with us, then go to your homepage at mytradingiq.com, and you can sign up for the free trial right there. Okay, and yeah, that's all you need to do. Go there, sign up for the free trial, and you'll be good to go. Right here. Click on that. Then download the trading platform. If you go to the platforms, the TradingView platform is right here. Watch this video and give us all your user info, and we'll get you set up on TradingView today. All right, so now we're going to start the live stream. Now in the live stream, if you have any questions, you can type them right into the live stream directly. There in the TradingView live stream, whatever you type into that, for everybody who's in this one, we go to webinar right now at mytradingiq.com. The stuff you type in over there, everybody can see, and it's permanent. The stuff you type in here, not everyone can see, only we can see. So either place, feel free to type in whatever you want, and I will do my best to answer all your questions. Now, if anybody wants to see anything other than futures in the TradingView live, or right now, just let me know. Type it in wherever you are, whoever you are. Just let me know. All right, on the NQ right now, we got a deep enough pullback right here that I'd take a long trade if we popped out of the oversold. Okay, it would give us an arrow. We didn't hit the ribbon, so it's not a ribbon trade, at least not yet. Okay. So again, the rules for the trade. If you go to mytradingiq.com, you click on trade rules. The rules for the trade are right here. The entry rules are right here. This would be a long trade with the slingshot. If it pops out of the oversold, it would be a long trade with the slingshot. Right. So right now it hasn't popped out of the oversold yet. It hasn't hit the ribbon yet either. It's going to pop out right now though on an up close on this bar, I think. So 80 1/4 would go up to 84 1/4. So you'd be buying 84.50 right now. by an 84.50 when it gets up there. That's where it's going to close, right? These are range bars, so I know where the bottom is. It's going to be, I'll be buying 84.25 now. I know where the bottom is, so I know where the top is going to be. Okay, the top is going to be 16 ticks higher, which is right there, and that just filled me right there. All right, I'm going to take a slippage. Now this is automated, so if it gets 8 ticks in profit, it's going to automatically bump my stop to break even. Because this is a 16 tick range, my stop is 20 ticks away right here. Okay, my stop is 20 ticks away because this is 16 tick range. I also have a 30 tick target on right there. So right now this is all automated. If it goes up to 8 ticks in profit, it's going to bump my stop to break even for me. Maybe break even plus a tick. We'll see. But this is a valid trade right here, as the long-term trend is bullish. We came down, we hit the ribbon. Actually, we didn't hit the ribbon in this one, but we pulled out of the oversold with the black being in the green. There, bumped it to break even plus a tick. Okay, and it just took me out at plus 1 tick. Right, so that part is all automated. And so now we have to wait for another trade. Wait for this. It should exceed the prior swing high, which is right here. All right, if you go out here to the trade rules at mytradingview.com, click on trade rules. So what I did in that case right here was this. A long trade, a buy with the slingshot. The black line in the ribbon must be on the bottom. That is this black line right here. Must be on the bottom of the ribbon. And in the green or silver, green color or silver, you can see it's in the green right here. And the lead or the black line in the slingshot must cross above the oversold. This is the black line in the slingshot, and it crossed above the oversold level. The oversold is this blue line right here. Those are the rules for the entry. So I did the rules for the entry perfectly. I had my buy stop limit order waiting there. It triggered me in just like it should. And then the next part of a trade is the risk management. Right now, this is the part that people normally screw up, is the risk management. Long term. Over time, people get the entry right all the time, but they don't get the risk management right. Because this is a 16 tick range bar, it originally has a 20 tick stop, and the stop goes to break even after 8 ticks in profit. So that part of the trade, it all happened automatically right there in front of you. We entered the trade perfectly. We had the entry just right. Went to 8 ticks in profit. It automatically bumped the stop to break even plus 1 tick. So it took me out with 1 tick when it came back down. Now, once you get to that point where you don't have any risk in the trade anymore, that's where you really want to be. In every trade where you don't have any risk. And then you just have to manage it. Now, the rules for managing the trade, that's the third step, the exit. Okay. Look left for the prior swing high or low. That would be right here. Then learn how to read the DOM. That's what we teach you when you become a partner with us. We teach you how to read the DOM so you can search for the numbers that the price should go to. Now with the NQ, it's a little harder to do because the NQ only sees 10 levels out. So you can only see from here to here with the NQ. But this stuff is really important. And then the leg lengths are also important. That was in yesterday's lesson. I think we taught the leg lengths. So okay. So yesterday's lesson, we were talking about leg lengths. So what I would anticipate in a leg length is, well, let's just draw the leg lengths. See right here, since this move started, it went up and it didn't have a significant pullback until right here. Okay, so the leg length is just about like this, right there. Right, so that's about what you'd expect out of the next trade. That is your leg length. Okay, so the prior swing high right here was one thing, and now the leg length is the next. Okay, and then when you get your pullback, like right here, you just met the leg length, right? And so when you get your pullback now, this is the next leg length, right? And this is all part of the training. If this is all brand new to you guys, then take the free trial. take the free trial, and this will all make sense to you. Okay, so that's what you're looking for. All right, so now we're going to look for a pullback here. We've exceeded the prior swing high, and we're looking for a pullback, and we're going to jump in it again. Now, when we get this down closed, you see we've hit the ribbon now, so we don't have to get into the oversold. We just need an up close off the ribbon right now because the black line is still in the green. It's going to be 86 up to +4 right there, 90. 86 up to 90 is where it's going to be right now. Okay, and there it is, triggered in right there. And so here I am, long again. Okay, I'm throwing my stop. Oops, I was throwing my stop at break even. Now my stop is at +6 ticks. It just took me out. I messed that one up by trying to do it manually. Oops, I got excited. Anyway, so I got 6 ticks out of that. Oops. So what do we expect now? Now, we expect this to turn up, get all the way up in there, and the green line to turn up and get all the way up there. And where should it go? Bink. Right? Okay, if you don't know where I got that from, take the free trial. And we'll show you. I should probably say to take the free trial, to actually take the free trial, go out to mytradingiq.com. Yeah, there, it's already in there. Go to mytradingiq.com, sign up for the free trial right there. Okay. So I anticipate that this is going to get probably up to there and maybe more than there. Okay, maybe more than there, up to there. Right. All right, so while I was doing all that, I didn't even look over here at the ES. The ES just had a trade here too. So what do you expect out of the ES? From here to here, right? From here to here. Should at least exceed this prior swing high. Right? Makes sense to everybody? Does anybody want to see anything other than futures? If you want to see anything other than futures, all you have to do is say so. This did not exceed the prior swing high yet, so we did not continue the trend here on the NQ. This did not exceed the prior swing high here, so we don't have anything there. The long-term direction over here on the gold is flat right now, so we don't have anything there. So we're just waiting. Just waiting. But that's so weird. All right. So far we've had a tick on that, and I think 6 ticks on that one. Let's see if we have any follow through on any of the other trades or these other markets. It's been pretty. It hasn't been slow, really per se, but there have been some really flat periods today. This right now, you can see the long-term direction on both these markets right here, nice and bullish, but the gold is flattened right out. So it is 1:11. We have 19 minutes left in this session for you. And anybody that's in here in the live stream, if you have any questions, you want to see any other market, all you have to do is say so. Going through the list of everyone who is in here right now. George P. Did you ever get that meeting set up with Dwayne? I know you've been trying to set one up with him. All right, we did not put in a higher swing on the NQ or on the ES, not really. Just one tick isn't really much of a higher swing. We did get to the prior swing high though. So if you're using that for a target, we did make it up to the target number. But we just don't have a follow-up trade. Anybody's got any questions? Looking over here in the live stream, and it looks like in the live stream, I don't know if you guys can see my whole chart in the live stream. Can you? Something go out of whack when I work remotely with my laptop. I can't tell. I'll just work under the assumption that everything is good until somebody tells me otherwise. The crude oil is starting to trend here, put in a higher swing. So let's look at that on a little bit bigger picture. Okay, so we've had trouble here before. Now that's a 69.06. Let's go and see if and why that's a significant number on a larger time frame. Okay, on the crude oil. Oops, the crude is by itself. Let me minimize that. Hold on. The crude oil. Here it is. All right, so we're pulling away from a weekly trading zone right here. And the ribbon, the BBC is about to cross up. Now when it crosses above, when the BBC is above right here, the ribbon changes to bullish. We got a long way to go on the upside on this crude oil right here. There's a long way for that to move. The midpoint would be the nearest target number. But so because that's so far away, I would look left, see the next most likely number, and it's right here at 69.45. I'd be looking for crude oil to get to right about there if it does start to move up. Okay, but it's had trouble moving up here before, so I don't know for sure if it will. Hey, great, Pippin. So Pippin is in your name, so I'm guessing you're coming from Forex. Have you ever traded futures at all? If you want to look at Forex, you just got to tell me what you want to look at. And I see you're a Pro Plus member, so that would be great. Being a Pro Plus member, you can get all of the charts. So if you sign up for the trial, I can set your charts up right now, as a matter of fact. I think. Hang on. Let me go in here and see if I can do that while I got all these other things going on. I don't know if it's going to kick me off on this side. I log in again. All right, so the crude oil is making a pretty nice run for it right here. That's good. You want to see that, and we'll go back and look at that number that I gave you just a second ago, here in a minute or two. What I want to see right now, though, is if I can go in here, in here, in here. And do this all the way down here, Ninja Access. Go back here, see if I can copy that all right there. Copy. I did. For the trial, you want to see natural gas? Okay, well, the natural gas inventories came out today. You probably know that already. I will show that to you in just a minute. I'm setting you up right now, though. Okay, give me a second. Okay, that was the context. Do this link shot. They make this so easy. TradingView is awesome when it comes to this stuff. Helping new people. Okay, you are all set now. All right, so let me just close this. I haven't looked at it yet. I'm gonna look at it in just a minute. I was setting them up. I'm gonna change the gold to the natural gas. What's the symbol for natural gas? Okay, so Pippin, what you need to do, I'll show you in just a second what you need to do right now, because you're all set on your desktop. What you need to do is really simple. If you go here to my, that's what it is, GNG. GNG. G. GNG not found. How about just NG? Probably NG. Oops, NQ. NG. Natural gas futures. These ones right here. NYMEX. Right. NGM. Okay, so here is natural gas. This is natural gas on a 7 range. Now, because of the way natural gas is, hang on, we got some more trades triggering in here. But because of the way natural gas is, you're gonna have to change the sensitivity on it. Okay, so we will show the no trade zone. It's gonna have all of the no trade zone right now, and then we'll go in here and change the sensitivity until it makes sense. It's not gonna be 0.0, it'll probably be 0.0. 0.1, 0.5. Okay. Try that. There it is. Okay, so what we want to do is we want to change the sensitivity until the flat areas have no trade zones. Okay, so that's probably too much in there. It'll disqualify, it'll remove too many trades. The no trade zones are when the long-term direction is flat. So right here where it's starting to get flat, that's pretty good. Back here, it seemed like it was a little too much. So we might want to change it just a little more. 0.8. Okay, there. All right, so that's going to give you your arrows in the natural gas. All right, now let's go back to trading here. We had the crude oil a few minutes ago. I gave you a number on the crude. Let me show you the crude. That number, it wasn't there, sorry. I didn't give it to you there. I gave it to you here a few minutes ago. This number, remember I said that number a few minutes ago? So this is the first number. This is the next number. If we break through this number on crude, I would look for it to get to right here to begin with, right? So right there, be your next number. Okay. Now we had the arrow down here for that crude trade, and we had another arrow right here for the crude trade. We had a couple of arrows that triggered in here on the ES. Both of those would have been nice winning trades. I missed both of those. On the natural gas, you want on Pippin, you want to look at the natural gas. Here it is right here. And if we look at this on the full day right now, let me take off the no trade zones. That's what all these pink areas here are no trade zones, where it says do not trade in these areas, or you will not get any arrows in these areas. That's what it basically says. Okay. So you can see the natural gas gave a few decent trades in here using the arrows. And we scroll all the way back. Natural gas inventories came out today at 10:30, right in here. They came out. Had that big move right there when it came out. Now, this is on a 7 range for natural gas. If natural gas really doesn't move around all that much, then you can look at it on a smaller time frame, like a 4 range or something like that. And in that case, you're going to get a lot more entry opportunities. Okay. Your risk is going to be smaller. Your targets will be smaller, but you get a lot more opportunities. Okay, that's what natural gas looks like. So to me, right now on natural gas, what I would look for, let me go back to the 7 range because that's where I normally do all my stuff. I'm in a 7 range right now. I'd say don't trade natural gas. Wait until it chooses a direction. It really hasn't chosen yet. It's made this one big whip down this whip right here, and it could make another one right back up. So you're gonna have to wait until it chooses a direction. That's what I would say with natural gas right now. Okay, and the crude oil's still going. I don't remember what the number was on that next level that I gave you, but it hit the first one, and this is the second one all the way up here. That's 70.18. 70.18. Okay. So Pippin. This, what you need to do now that you have your stuff enabled, you go here to mytradingiq.com and click on trade rules right here. Click on trade rules. Then click on this. When you click on that, look at the end of that URL right there. That is this right here. If I hit save on this right now, if you click on that, everything that we have with the natural gas on it right now, that natural gas that I just put on, it'll bring that up. It'll be read only until up here in the right hand corner, it's going to say copy. If you click on the copy right up there, then it'll prompt you to give it a name. And because it says in here that you're a Pro Plus, you'll be able to do all 4 charts at once if you want to. If you want to switch out of having 4 charts at once, if you want to go down, because the maximum that you can have is 4. If you want to go down to just 3, the way it does it is it lops them off starting on the right-hand side. So if you want to go to 3, it's going to lop off the NQ. See, that just went away. If you want to go to 2, it's going to lop off the ES right now. So if you just want to go to 1, it's just going to be natural gas, because natural gas is on the left. All right, so if you want to drop it down to a different number of charts, then you have to organize the charts in that way. Okay, that's because I can see that you're a Pro Plus member. So by default, you'll have all this right now. If you go out to mytradingiq.com, click on trade rules, and you click on this thing right down here at the bottom. Now, these are all the rules for the trade setup, so you don't have to set anything up, or you don't have to set anything up yourself. It's all done for you. That is another thing that TradingView makes really, really easy. All right, so.
Did you see Zen Master's question?
I did not. What indicators are you using? What is the red green indicator in the background? Okay. In here on the price panel up here, all we have is one indicator. It's called TIQ context. And within it, I meant to just place this right here on crude. Everything within it is, you can turn it on and off within it. There's things in here that aren't turned on as well. But what you're talking about is down here, the context. Those colors in the background. All right. Now I know right now there's just a whole bunch of lines and a bunch of nothing to you. But I guess, I'm not going to try to trade too much right now. I'm just going to try to explain stuff so it'll make a little sense to you. All right. To everybody that's watching, I'm going to just do more explaining right now than trading. Okay. So let me do this and we'll blow this up. This is what it looks like. This is what price looks like without our stuff on price. This is one indicator, the TIQ context. When you sign up for our trial, I have all these things that are available, but you'll get the slingshot and you'll get the context. Okay, you'll get these 2 things because that's all you see on the chart. Now, within the context, we have a thing called the BBC. That is this green line, but I don't keep it green. I call it the BBC ribbon. That gives it some color when it's going up and down. It's blue when it's going up. It's red when it's going down. BBC stands for bull bear cross. When price gets above it, it's bullish. When price gets below it, it's bearish. Now, by itself, it's pretty good by itself. It gives you an indication on where the market's going to go. But to get more precise entries and to give you more information about the trend of the market and everything else, we add all these other things in. So right here, you have the BBC, and so you can tell when price gets above it, most of the time it's going to go up. Right? Pretty good to know. Use the slingshot to go with that, and you get more precise entry points and exact entry points using the slingshot and the range bars. But to help you with the context, to understand that you're in a stronger trend, and to help reduce the number of stop outs that you get, we add these other things. This black line that you see here is part of the ribbon. This is the bottom of the ribbon, and BBC is the top of the ribbon in this case. They're the outer bands of the ribbon, black line and the BBC. Now, the black line comes into play to disqualify trades, and the BBC comes into play to qualify trades. If price comes down and hits the BBC or any part of the ribbon, then that can be a trade all by itself. It can be. It's not necessarily one, but it can be one. The black line down here is one that disqualifies the trade. If the black line gets into the wrong color, then it'll disqualify a trade. Right? So within there, we added these to help you see more clearly when the trend is strong. When they spread out, the trend is strong. And if you get a pullback within a strong trend, the next leg should be significant, and you can take advantage of that. All these other pieces come together. All right. I know it seems like a lot right now, but think of like a 20-piece puzzle that you might have sitting on your coffee table. And that 20-piece puzzle is, the first time you do it, it takes you 5 minutes. And the next time you do it, it takes you 4 minutes. The next time you do it, it takes you 3. And then eventually, you can do it in like 10 seconds. Then eventually you can turn it over, flip it upside down, and do it backwards without seeing any of the colors on the front, because the pieces all fit together, right? You know how they fit together. You don't need to see the colors anymore. You just know what's going to happen. You know where they fit. And anyway, so this is to give you a better view right here of the trend. Okay, so to add to that, you want to trade in one direction, right? If your long-term trend is up, you want to just take long trades. And if your long-term trend is down, you just want to take short trades. And within that long-term trend, the short-term trend is going to go back and forth. So you want to get into trades where they're going to be coming together. They're not always going to be together, but they're going to be coming together. So to show you that, we have these bands right here are the long-term trend. Okay. And I know there's just a whole bunch of lines in there for you to look at, so I don't leave it at just lines. I give you color, your long-term right there. Okay, that's your long-term trend. Now, within the long-term trend, you also have your short-term trend that's going back and forth. That's what these are, right? So that's where this black line comes into play again. The black line has to be in the right color for a long trade. If you're using the slingshot, then the black line can be in the silver or in the green. If you're not using the slingshot, it has to be in the green for a long trade. For a short trade or a sell, if you're using the slingshot, then the black line can be in the red or the silver. If you're not using the slingshot, then the black line has to be in the red. Okay? So that's pretty much what's going on in the context. Now, in the TIQ context, all right? Those are all the main pieces of it. So what I did to help you identify when the long-term trend is starting to change, because a lot of times people's eyes play tricks on them and they can't see, and they have some ambiguity in there, and they say, well, I can't really tell if it's long or not in here. I added these other bands. This one right here, okay, to let you know, if this is blue, that means your long and short-term trend are both bullish. If it turns to white and it's going up, that means your long-term trend is still bullish, but your short-term trend is turned against you temporarily. Okay, and that's it. So you can see everything all at once. And then to even help you further with the rules for the trade setups, I added the arrows. Now we'll just go with the little arrows to begin with. If you look at the rules for the trade setups right here, trades with the slingshot, either one of these with the slingshot, all right? That means that down here, this black line has got to be either overbought or oversold, depending on what direction you're trading in. And so if you're going for a long trade, then you want your long-term direction to be bullish, and you want this black line to be oversold. So you're going from the bottom up to the top. That's when you get the little white arrow telling you get ready for a trade. It's almost time for a trade, right? That's what the little white arrows are telling you. And then the trigger is going to be when it actually crosses from the oversold above the oversold level, from below to above the oversold level. And that's where the black arrows come in, right? So all the rules are just right there for you, right? Right there for you. The black arrows come in after the little arrow. The little arrow says, get ready, and the black arrows come in saying take the trade. Okay. Did that answer your question, Zen? I thought I would do that rather than go through a few more trades. All right, guys, I've used up all my time in all that explanation. I've used up all my time. So we're going to end with 2 profitable in Q trades. There were some nice crude trades that I could have gotten and made some money on during this time frame. There was an ES trade or 2 that I could have gotten and made some money on during this time frame also. See, the ES trade was right there, another one right there. That one would have stopped you out. But both these right here would have been good profitable trades. And pretty much every crude trade would have worked out. We had a couple of NQ trades. These were not valid trades right here. But the ones that we did take on the NQ were good trades. These right in here. And there was another one there, and another one there. And I wouldn't have taken that if we didn't put in a higher swing. And I wouldn't have taken that without putting in a higher swing. And I would have stopped out on one of those and not taken any of the other ones. But that's it. If you have not taken a free trial with us, go out to mytradingiq.com, sign up for the free trial there at mytradingiq.com. All right, I've run over my time. I need to wrap this up because I have another meeting coming up very shortly. Okay, so if you want to take a free trial, again, go to mytradingiq.com. If you like what you see, we do this every day from 9:30 to 11:30 in the morning. We've been doing it for over 10 years. So I didn't even get into that part of it. This is our spreadsheet. We do this spreadsheet at the end of every business day, right? At the end of every session we do in the morning. So it's got our daily results going back over 10 years. Daily results. These were all our monthly results from last year. And every one of these months is broken down into daily results in here. The markets we traded, what we got on market, how long it took to get the goal for the day every day, how much money we're at when we got the goal for the day. Like today, we got the goal. Today, it took 3 minutes and 2 trades to get to the goal. We were at $800 at that point. That's where you want to be. Okay. This stuff works on everything. Any market you want to trade, you can trade it. Right? Even the Forex. Oh, you guys coming over from Forex. If you've never done anything but Forex, you're going to love this stuff. It takes out a whole bunch of the ambiguity that exists in Forex. All right, that's enough. I'm going to wrap it up. Thanks for coming today. We'll do another one tomorrow at 1. All right. Or take the trial, and you can be with us tomorrow morning at 9:30 a.m. All right. Thanks for coming. Wrapping up the live stream. Okay, this stream is wrapped up. And Dwayne, you can pass it back out to Fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Well, Dwayne's not bringing it back over to Fabulous Phoenix, Arizona right now, but we can still
I'm
show you
sorry, I got distracted. I'll do it right now.
That's okay. I mean, it's not like they're not looking at anything. You know, they're still seeing my charts, so that's all good. You know, the people on the live stream just got cut off, but everybody else is still just looking at my charts.
All right.
Change this back to gold.
Recap of the morning session.
Today it took 3 minutes and 2 trades to get to $800.
Love it when that happens.
Thank you.
Okay, guys. We already covered the daily chart. Now, what's changed since we looked at it a few moments ago is we're still well off the high of the day. We're off the low of the day. We're back above the 24% fib retracement. Got a tiny green body on that daily candle. But we have resistance at this trend line. Then we have potential resistance at the high of the day. And then all bunched up, we got the daily BBC, the step line, red and falling. That's called resistance times 3. So, from a logical point of view, path of least resistance for this market is a move down to this area where the last bullish cross took place. Doesn't mean that's what's going to happen. It's simply, in my opinion, how I see the market, the most logical thing to happen. Okay, so the vertical line that you see on the 30-minute chart, all alerts, the logic alerts, the concierge alerts are all based on the 30-minute chart. Now, in a mentoring session yesterday afternoon, on Tuesday night, I had issued a Logic 247 alert based on this window of opportunity. You see, price moved up and then price tried to go lower. This was a red candle all the way down. Then buyers came in, drove it back up, and then price moved higher up to the zone. Expect support when price drops to a zone, resistance when price rises to a zone. Okay. Published the zone since December 14th of 2009. They come out every Monday morning for our members and trial members at 6:15 a.m. Eastern. Once they're published for the week, they're carved in stone. They don't change any whatsoever. So on Tuesday night, I issued a Logic 247 alert from this area here down to the zone. Now, you always hear me say that I build in time to the alerts so that you can study the 30-minute chart, see the window of opportunity that the alert represents, and be prepared to take action when price finally reaches the entry, long or short, of the alert. And this was a short alert. But I knew that in order for the market to make it to this zone, and price is always trying to get to a zone. If it's below the BBC, it's trying to get to the zone below. If it's above the BBC, it's trying to get to the zone overhead. So I knew that support had been defined right here at the low of this candle. It was a red candle all the way down. By the time the 30-minute period was up, it was just wick. So buyers made a stand right there. Okay. So in order to take a short trade, we have to overcome that line of defense established by buyers that sent the market higher. And so this alert came out shortly after the Globex Open Tuesday night. It didn't trigger until yesterday afternoon, about 3 o'clock. Well, this is the 3 o'clock candle, and it triggered, and it ran right to the target, and it found support, consolidated, and then continued dropping. And when the markets opened last night, we had a gap lower open. Okay, so when you hear me talk about market structure, this is what I'm talking about. This is a classic window of opportunity. Sometimes it'll get triggered in a half hour. Sometimes it'll take almost a day. Okay, and sometimes they don't trigger at all. That's on the recap where you see the no trigger. That's where it just never dropped or rallied, but turned and went the opposite direction. So that brings us over to today. Now, remember when I was talking about CTAs, I talked about the lines in the sand. Okay, see how I drew a line in the sand last night at 41.37, line in the sand at 40.76. That was at 6:40 p.m. Eastern. You can make your lines look any way you want. This is just how I chose to make mine look. Now, we had a gap lower open. This is the first 30-minute candle. The CTAs were posted 10 minutes into the life of this candle. Now, anyone who's been with us for any length of time knows that, number one, outside of Sunday night and earnings season, you rarely see a gap on futures. Stocks gap every day, but because futures trade around the clock, it's only Sunday night when the market's been closed for a day and a half, or again during earnings season, when you will see potential action like this. But anyway, so at this point in time, there was no reason to consider trying to trade to the short target because price was climbing, filling that gap. Sometimes I'll put out a gap fill trade, but most of our traders already understand the concept so well, I literally don't need to put the alert out. But if you're new, when you book a mentoring session with me, I'll go over it with you in great detail so that you understand it. So price pulls up to the BBC, pullback holds more often than not. We got the zone is 4111/4112. Okay. So we poked above it, but we never really pulled away from it. Before we would start thinking about trading towards the long target, we would have to overcome this high on this candle right here. Okay. Because just as where I showed you over here, this candle established a support area. This candle established a this candle right here established a resistance area. And look what happened. Price came right up to it. Looks like literally to the tick. The high of that candle is 41.18. High of that candle is exactly 41.18. So we know that we have to get at least a couple points above that area. Then we go to a smaller time frame and start looking for opportunities to go long. Well, none of that ever happened. Instead, we consolidated at the zone. Only three things happen at a zone. 70% of the time, it's going to be this: consolidation. Blue and climbing, turned to red and falling. Price got below the BBC, along with red and falling. And down we go, all the way to the target. If you wanted to be really conservative and, maybe wait for price to take, you could have got your goal for the day on this candle. But let's say you didn't. Let's say you waited for price to take out these lows here. So using your smaller time frame, you get in, somewhere around 40.98. You get a drop down to 40.86. 12 points. And then a bounce. And then a drop all the way to the zone, through the zone, back above the zone. Back above the target, back down to the target. Another pullback to the BBC. Remember, the pullback holds more often than not. You'll have to see it a lot of times, and then it will become a market truth. Not a market myth, but a market truth. So we found resistance at the BBC, printing a red candle. Makes perfect sense. Here's where you have to look left. Okay. This candle right here opened red and came down. So that low represents a potential area of support. So if you wanted to trade short down to the step line, you could. Or you could wait for price to get below the low of this candle. Say 40.78 down to 40.76. But keep that on a very short leash, because red and falling has already turned to blue and climbing. And when red and falling turns to blue and climbing, that's typically telling you price is going to move higher. And when blue and climbing turns to red and falling, tells you price is going to typically move lower. This is what we call a bearish cross. And the red line crosses below the green line, which is called the BBC. That just stands for bull bear cross. Price crosses below it, bearish, we anticipate lower prices. When price crosses above it, we're bullish, we anticipate higher prices. But we're looking left to see where obstacles are. Now, if price had managed on this move to take out this high by a couple points, then, boy, we had a beautiful window of opportunity right up to here. That would have been potential resistance. And then right on up to here. Then right on up to the zone. Remember, we're not teaching you how to trade a specific market. We're teaching you how to trade. That's a life skill. Once you understand how price flows the same across all markets and all time frames, once you learn the strategy, how to read the indicators, then you can trade anything, anywhere, anytime that market's open. And that's why we really like futures, because they trade around the clock and we have traders around the globe. So their day session is our night session, vice versa. So we're coming down with a nice red candle. Anticipate potential support at the step line. Definitely at blue and climbing. Now, it's not an absolute that price is going to stop here or stop here, but it is a great probability. And that's what we're looking for, is high probability, low risk trade opportunities. Now you'll notice this step line, as price was coming down, it crossed. You see how the black line, the step line, it's on the left side of red and falling? You see how it's on the left side of red and falling here? Okay. Once that step line crosses from the left side to the right side of red and falling, that's an indication that price is probably going to try and pull back to the BBC. And that's exactly what it did. So there's a little bit of tradable opportunity here. I would prefer to personally wait, let price get below blue and climbing if it can. Remember, blue and climbing represents support. But price can trade through blue and climbing. When it does, blue and climbing will turn to red and falling. Okay? So if price trades below blue and climbing, then you get a window of opportunity from 40.70 down to about 40.65, 5 points. And then if we take out this low, we've got a huge window of opportunity down here. This is the lowest weekly trading zone this week for the ES. Okay, on to the Dow. Here's where the market opened last night, 6 p.m. Eastern. Price pulled up to the BBC. Pullback held. Blue and climbing turned to red and falling. And price dropped to the target, through the target. Step line crossed red and falling. Price pulled back to the BBC. Didn't quite get all the way there, because not only is there pressure from sellers, but right now buyers are not very committed. Buyers who watch daily, weekly, and monthly charts know that we're at a very important inflection point in the markets. Fibs are not proprietary. They're 14th century math. So while our indicators may be proprietary, institutional traders are seeing these same fibs from the October 13th low. We've been in a downtrend over a year. Low was put in October 13th. The bounce off that low came in February 2nd. And now we've got this double top right here. Looked like we were going to the moon. Looked like we were going to the moon. Now we're stuck with a daily doji, which represents indecision, right at the 24% fib retracement. Now, that means price could do either way with the doji. Again, it represents indecision. The path of least resistance, however, is a drop to the bullish cross. And if we get through that area, then down to the 38, and then down to the 50. Okay. All right. The daily chart provides you with information that you won't see on your 30-minute chart, your tick chart, or your range chart. So no matter what market you trade, whether it's futures or stocks or crypto or Forex, spend 2 minutes with the daily chart when you sit down to look for trading opportunities. You don't sit down to trade. You sit down to look for high probability and low risk opportunities. I know we all just want to click the mouse and make some money and be done with it, but, well, how's that been working? It doesn't. Okay? So you got to learn patience. You got to learn self-discipline. That's simpler for some, more difficult for others. If you struggle with that, then I will work with you on that in your unlimited one-on-one mentoring sessions. Okay? All right. Now you see how price on the Dow came down to the step line and bounced. What did it do on the ES? On the ES, price came right down to the area that we said could be potential support. Look at the bounce we got. It's not huge, but hopefully it helps you understand that our indicators, while, you know, we don't try to convince people that we know what's going to happen next in the market. That's nonsense. That's an insult to your intelligence if anyone ever tells you that. When God created Adam, he did not give Adam the ability to change the past or know the future. And those two things are inextricably linked for eternity. Now, with our indicators and our strategy, we do know with great certainty what the next high probability move is. I just told you, price is most likely going to drop to the step line, and there's a high probability it will find support. Okay, that was the first time down. If it comes down again, it might get through it the second time. If it does, then I expect it to find support here, where you see this little spot of blue. Red and falling, turning to blue and climbing. It's the same thing over and over, again and again. We don't change our swing every time we step up to the bat. Our methodology, strategy, and indicators are built on the underlying principles of how markets work. And once you understand how price flows across all markets and all time frames, again, you'll be able to trade anything at any time when opportunity presents itself. So the Dow had a bounce. It's going to come back. It's going to test it again. If price gets below the step line, and the low of this candle, and you've got a little window of opportunity down to red and falling. Oh, say 33,130 down to 3,300. That's 30 points, $5 a point, $150 per contract traded. Once you've earned the right to trade 10 contracts, that's a $1,500 potential move. Okay. When you become a lifetime member, a passport holder, you don't start trading real money right away because you haven't learned the strategy yet. You haven't learned how to read the indicators. You haven't learned how price behaves around the weekly zones. So you're going to get what's called a 24/20 blueprint, and it is going to walk you through a lot of things. Writing a business plan, writing a trading plan. 9 out of 10 new traders fail because they don't have a teacher. They don't have a trading plan. They don't have a business. They don't even know they need them. Oh, I watched some YouTube videos. I read this great book. Okay. That's not a replacement for a living, breathing teacher. So you get 2 hours of live training every trading day. Unlimited one-on-one mentoring. And the strategy remains the same. We're always looking for price to pull back to the BBC on the 30-minute chart. And then we go to our smaller time frame to get our short entry. Okay. Now, would I trade this right here, just right off the 30-minute chart? Probably. But if you're new, risk management. In the live training room, you're going to be taught aggressive risk management. Very aggressive. New traders often ask the wrong question. How much can I make? You never get the right answer by asking the wrong question. The question should be, how much can I not lose while I'm learning how to trade? So while the blueprint is going to walk you through the business plan, the trading plan, it's also going to put you in a simulator or your demo account until you can put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint will give you the green light to go live with 1 contract. Your goal now is to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add a second contract. Your first contract is funded with your startup capital, but the second contract is funded with profit you earned in the market. Blueprint will tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. You only add one at a time, and you only add with profit you earned in the market. If you have the self-discipline to follow that formula as it's laid out in the 24/20 blueprint, it will make blowing up another account far more difficult. You'll just have to blatantly break rules, okay? So, this is why we invest in you before you become a member. The trial, there's no credit card required. We expend our time, energy, resources in you so that you can make a well-informed and intelligent decision as to whether or not trading is even right for you and if our style of trading is right for you. Only then do you spend money. And you're investing in yourself. When you become a lifetime member, that's lifetime access to everything we offer. Everything we do, everything we've ever done, anything we do in the future. You'll never pay us another dime when you become a passport holder. Okay? Everything a trader needs, all under one roof, one low price. We managed to spike the step line a little bit. So far, it is holding as support. So this window of opportunity never came into play. Now, if price starts to move higher, then red and falling is going to curl and turn into blue and climbing, just like this right here. Okay. When that happens, if that happens, that totally negates this window of opportunity. The Russell. Also, gap lower open last night, gap filled. You might be thinking, if you're new, man, all those charts look eerily similar. That's usually how it is with the four major indices, the S&P, the Dow, the Russell, and the NQ. The three markets we've looked at so far, Dow, S&P, Russell, all had a gap lower open that filled. That's one of your most high probability trades you'll ever find. Is the gap fill on the indices in the futures market. So, price comes up here. Now, we had a bullish cross here that led to an extended move. When price came down and hit this area where the bullish cross took place, what happened? It acted as support. I was showing you a similar scenario on the daily chart. Right there. If price drops down to this area, it will most likely find support at the area of the bullish cross the first time down. On the Russell, it happened. We bounced, but then the next time down, it managed to overcome that previous bullish cross. It managed to take out that low, these lows, and even these lows. This is Thursday, this is Wednesday, this is Tuesday. So price came down to the weekly trading zone. Remember, when price drops to a zone, we expect support. When it rallies up, we expect resistance. When price slices through a zone like this, there's only three things happen at a zone. 70% of the times consolidation, 20% of the times rejection, 10% of the times a slice. When price slices through a zone on the 30-minute chart like it's not even there, what will typically happen is price will retrace back to the zone it sliced through and then continue in the direction of the slice. And why did price stop right there yesterday? Look left. Now, it did put in a slightly higher high, but we're always extremely suspicious of slightly higher highs or slightly lower lows. Okay? Got to make the market prove itself. Because remember, we're not trying to outsmart the market. We're not trying to beat the market. We simply want to understand whatever market we're trading. What are the institutional traders seeing and thinking What action are they taking? And then we simply do what they're doing long enough to get our goal for the day. Trading's not easy, but it can be that simple. So we get our bearish cross, we come down to the zone, we find support, textbook, bounce up to the VBC, the pullback holds here, holds again here, and sends us almost down to the short target. Doesn't quite make it all the way, but it certainly makes it far enough for you to get your goal for the day. 1724 down to 1714. It's 10 points. $50 a point. $500 per contract traded. You've earned the right to trade 5 contracts. It's $2,500. So now we're back at the BVC again. And again, the pullback is holding. The step line is at the low of this candle. So price has come down, touched the step line, and bounced. We need to see price get below the step line. But you got to be cautious because right below that's blue and climbing, which also represents potential support. Is there room in between the two? 1721 down to 1719. Yeah. But if we consolidate sideways for a little bit, this blue and climbing, which is potential support, it's going to rise. So I would prefer to be patient and wait for price to get back down here and trade that. That's a high probability, low risk trade opportunity. 1713 down to 1710. That's 3 points. 2 points enough to get your goal for the day. Okay, so NQ. Gap lower open, gap fills, price runs to the BVC. Blue and climbing turns to red and falling. Pull back to the zone and bounce. Red and falling serves as resistance. So we come back down to the zone. We consolidate for an hour and a half. And then the move is on. All the way down to the target. An entry anywhere in this area. I will call it 1400 to make it easy math. Or not 13, no. 13100. So that's 75 points at $20 a point. It's $1,500 per contract traded. Multiply that times the number of contracts you've qualified to trade. Just because you have the money, don't think you can waltz in and start trading 3, 5, 10 contracts before learning the strategy. Okay, you're building a business. 2420 Blueprint is called that because it's designed to help you go from 1 to 20 contracts over a period of 24 months. It's not get rich quick. Don't sign up today so that you can pay the mortgage at the end of the month. That's not how it works, okay? This is a step-by-step process. It's not overwhelming. It may seem overwhelming at first. Oh man, BBCs and red and falling and weekly zones. Oh me, oh my, you know. Compared to most strategies and methodologies out there, ours is ridiculously simple, okay? Once you understand the core principles, the underlying principles upon which markets operate, it'll feel like you've been doing it all your life. And you'll have around-the-clock support while you learn and access to unlimited one-on-one mentoring. Renoro, I'm thinking you asked me that question. You make a lot of your calls depending on the BBC. Every trade, every alert is based on the BBC. In the Logic 247 alert channel, there's over 14,000 individual handcrafted alerts over the last 248 weeks. Every one of them is a trend trade. Now, the trend is defined by the 30-minute chart, price, and the BBC. So in a situation like this, I would only trade short because we're below the BBC. Here, we're above the BBC, so I would only trade long. Here, long took us right up to the zone where we expect resistance. Now we're starting to drop. Expect support here. In order for me to put out an alert, price would have to drop below blue and climbing. 13,050 down to 13,030. It's $400 per contract traded. The black line is the step line. When the black line crosses red and falling, it's telling you that price is going to most likely pull back to the BBC. When the step line crosses blue and climbing, that tells you that price is going to most likely pull back to the BBC. Here's crude. Crude has been kind of sideways. We opened last night when we opened. I don't know if that was a bad tick or what, but this thing dropped to 63.5, 63.64. When I put the alerts out, I knew that my short target had to be below where the market established support. This was a red candle coming down. Then buyers came in and drove it up. So that's a critical area. Price has to get below that before I'm going to attempt to trade to this target. Up here, price gets above, we get above the weekly zone, we pull back to the BBC, we've got blue and climbing. By the open of this candle, and in 10 minutes you're done for the day. Okay. Over here, price gets below the zone, below the BBC, you got red and falling. This one candle right here opened at 68.33 and traded down to 76.60. That's basically $700 per contract traded in that one candle. The fact that we never made it to the short target doesn't mean, everything was in place for a short trade here. Once you understand how price flows. So here we get a beautiful leg to the upside. That high lines right up with that high. You should be expecting resistance there. Okay. Go back to the BBC. We got blue and climbing. Now this high right here found resistance. Okay. When this candle opened, it traded green. And it traded red all the way down. Now it's pulling back up. Okay. If price pulls up to the entry point, it's going to turn green again. And that would make for a very nice trade opportunity. 69.30 up to 69.60. 30 to 60. It's 30 ticks. $10 a tick. $300 per contract traded. The market has just defined resistance. So that resistance has to be overcome before we enter a long trade. We're only thinking of long trades because price is above the BBC and we have blue and climbing. Now, if price were to drop through the BBC, through blue and climbing, through the zone, then my window of opportunity be here. Because this candle opened red, buyers came in and drove price up. So support was determined right here at the low of this candle, 69.76. So in order for me to want to trade short, I want to see price get below that low. And then I can trade relatively calmly, 67.90 to 67.60. $300 per contract traded. And then if price were to continue down and take out this low, well, then I could trade this window of opportunity here. And if that low gets taken out, this window here. And if that low gets taken out, we have a window down to the target. Now, if price filled this window of opportunity on the long side, and we took out this swing high and this swing high, that would give me a window of opportunity to trade right up to the target. Got to get above that high, and then my target should actually reduce my target a little. This is why I teach you always look left to see where the next obstacle is. You see that swing high right there is right where the long target is. Okay. Now all of this is archived every day and on our YouTube channel, youtube.com/CFRN. There's over 2,200 daily episodes archived. You can scroll back 6 weeks, 6 months, a year, 2 years. Pick days at random. Just fast forward where I'm doing the recap. And you'll see that over the years, while some may consider it boring, okay, I'm okay with that. If you are looking for an adrenaline rush, and I'm speaking to everyone, you're looking for an adrenaline rush, go shoot some hoops, or I don't know. I've got a buddy, a retired stockbroker. Every Saturday, he goes out to Falcon Field here, Mesa, and jumps out of a perfectly good airplane. He was a paratrooper in the Marines, and, well, that's how he gets his yayas. Okay? The market is where you want to not only learn to earn a living, but hopefully create generational wealth over time. Find some other way to get that adrenaline rush that we all need. That's just a part of the human existence. Okay? But here we're cautious, careful, conservative, and patient. waiting for the market to hand us a window of opportunity. And because we trade every market exactly the same, every futures market, every stock, every crypto, every Forex, there's always an opportunity setting up somewhere. Okay? But if you just want to trade one market, you can do that. But once you learn how to trade, which is what we teach, then you can trade anything, anywhere, anytime, as long as the market's open. All right, gold. Okay, the CTAs didn't come out until this candle last night. So while it looks like this might have hit the target, it did not. Okay, it was 640. It was during the life of this candle. But the gap filled. Price pulled back to the BBC. The pullback held. It bounced to red and falling, which I expect to be resistance. So that pushed it through the BBC, down through the zone. And this low lines right up with that low. So once you understand that concept, then let's say you were in a short trade here. This made a nice move. It dropped from 2042 down to 20, we'll call it 39. It's $300 per contract traded in that wick. But if you'd stayed in the trade, you'd have given it all back. But by learning to look left, you knew there was potential support at this low. Remember, this candle was red all the way down. But before the 30-minute candle closed, buyers came in and drove it back up, thereby establishing a definitive area of support. Here, here, and if price takes out this low, just might be support again. So I want to see price get below and then trade down here. I look left, I have no obstacles in my path. That's 2037 down to 2033. $400 per contract traded. On the other hand, we've pulled back to the BBC, so we anticipate a move to the upside, but blue and climbing has gotten directly above price. Now I have to wait for price to get above blue and climbing, because blue and climbing could be on its way to becoming red and falling. So I got to let price prove itself. I want to see it take out that high. I want to see it take out that high. And then a window from 2066 up to 2068. $200. Okay, silver. Market opened here. Ran up to the zone, found resistance, consolidated, dropped. And while it didn't trade all the way down to the low, it did trade right to where that candle opened. So this is one that, well, the Logic 247 alerts, 14,000 individual alerts, of which on average 20% or less have been stopped out. So while we don't know what's going to happen next in the market, we do know with a high degree of probability what the next high probability move is. So our best work, our best analysis, following all the rules, on average, 20% of the time, the market is going to do something other than what appears to be the next logical thing. And it's all based on logic. And the more logical it becomes to you, it's pretty soon it's just common sense. You look at the chart and instinctively you know what to do, or more importantly, what not to do. What do you do here? Nothing. Price hit the zone, dropped, bounced, dropped, put in a higher low. So that tells us price is going to move higher. Slice through the zone, hit the target, pull back to the zone it sliced through, continued in the direction of the slice. Now we can't do anything until price gets above that swing high, up around 26.35. And that is the highest weekly trading zone this week for silver. So by close of business tomorrow, the weekends, 5 p.m. tomorrow, expect price to be at or below the highest weekly zone. Now last week, crude closed below the lowest weekly zone, and it looks like it may do it again this week. Okay, that's an anomaly. Typically, price will close the week at or below the highest zone, at or above the lowest zone. Okay. All right, euro. Market opened. We're above the BBC. We've got blue and climbing in place. So it's a long trade right up to the zone. Price moves up to the zone, we expect resistance. Now while the pullback holds, more often than not, it held here and here and here and here and here and here. You know that eventually it's going to not hold. Okay? It keeps the markets fluid and tradable. So this is why we make the market prove itself. When price is pulling back to the BBC, we don't just park an order there to go long. We wait to see if we get an up close and then take our trade. So we come below, we pull back, it holds, even though we spike it. Both of these candles, all three of these candles are touching the BBC. Never let go. And that drop took us down to the target, down to the zone. The market is enjoying some support. Blue and climbing has just come into the picture. So now price is trapped between support at the zone and blue and climbing and resistance at the BC. And on the daily, now got some red in that candle. It's no longer doji. So it wouldn't surprise me to see a close at the current low of the day or lower. Not a forecast, just an observation. To become a lifetime member, you go here, eminifuturestrading.com. Now, anytime you hear lifetime or unlimited, there's always some fine print somewhere. There is no fine print. Our lifetime membership is that. It's for life. There's no recurring fees ever. Not monthly, not annually. There's no nonsense, no head games. This is what we offer. Lifetime membership, all access pass to everything we do, everything we've ever done, and anything new we do in the future won't cost you a dime. Everything a trader needs, all under one roof, one low price. Dennis, I'm not sure where you went, but I went in careful detail. You're asking me about the black line again. Okay. I went over it in careful detail. Let me go over it again real quick for you. I don't want to leave you hanging. Okay. When the black line, the step line, crosses red and falling, that's an indication that price is probably going to pull back to the BBC. And as you can see, it did. Over here, when the step line, the black line, crossed red and falling, what did price do? It pulled back to the BBC. And let's find it in the other direction. Okay. Step line crossed. We didn't immediately pull back to the BBC, as we often do, but it was an indication. Once that step line crossed, the high might be in. We went a little bit higher, then we went a little bit sideways, and then we pulled back to the BBC. And up here, when the step line crossed, blue and climbing, that's an indication price is going to pull back to the BBC, and it continued lower. Okay. Now, I went into detail on several different markets with the black line, the step line. So give it about 2 hours for YouTube to get this video rendered and uploaded. And then you can go to youtube.com/CFRN. You can fast forward up to the part where I'm doing the recap and then just pause it and play, and you'll hear me explain. And you can also book a one-on-one mentoring session with me. I'll be happy to go into more detail. It's part of the proprietary indicator set. Okay, let's wrap up with our good word for the day. Two days ago, talked about not wallowing in self-pity. Yesterday, we talked about choosing the right attitude. Attitude is a choice, despite your circumstances. Okay? Peace amidst the storm. Today, I want to encourage everyone who's a parent or a grandparent or a great-grandparent how important it is to build a relationship with your children. Did you think about this? Did you have a good relationship with your father or maybe mother? There's a statistic that has stood valid for a number of years. The average father in America spends 7 minutes a day in conversation with their children. Now, that's an average. You know, I'm sure some great dads spend hours, you know, and some don't even show up at all. But it's important. Now, don't get me wrong, your kids already have friends, hopefully. Real friends, not imaginary friends or internet friends, but real, you know, somebody they can throw the ball with, that kind of thing. So while a parent, and especially a grandparent, tends to want to be friends with the child, it's important to remember that they already have friends. What they need is a positive role model in their life. So you can be friends with your child or your grandchild or whatever, but keep in mind that they are looking to you, and they're really looking to see if you do what you say. You might talk about living right all the time, but when you get angry, when you get upset, when you've had too much to drink, they're watching. When you're trying to get them to listen to you, you can't get their attention for the life of you. But when you don't want them paying attention to what you're doing, boy, they're right there. So, Psalm 127 says, "Except the Lord build the house, they labor in vain that build it." How would you describe your relationship with your children? Strained, exciting, heartbreaking, enjoyable? If you want a real eye-opener, ask them to describe their feelings about you and their home. But be warned, what they say might not be to your liking. And having a Christian home doesn't necessarily exempt you. The old nature in us still rears its ugly head from time to time. And habits set in concrete can lead to broken communication. When biblical principles are ignored, the result is pain and strain in the family. 3 illustrations come to mind. One is Rebekah loved her son Jacob more than his brother Esau, so she used him to deceive their father Isaac and cause division in the family. Genesis 27. Number 2, Eli the high priest let his boys run wild, and in the end, it cost him his life. It's 1 Samuel. Number 3, David preached one thing but practiced another, and his children, as kids are apt to do, were more influenced by what he did than by what he said. 2 Samuel chapter 11. Nobody's immune. Not David, not Rebekah, not Eli, not me, not you. But evaluation is pointless if it leads to guilt without action. So what should you do? Take time to get close to your children. Deal with the barriers between you. You can't change anything unless you're willing to acknowledge it. And sometimes change must begin with you. For example, does your attitude need adjusting? How about your priorities? What about the example you have been setting lately? Before you try to deal with your children, ask God to deal with you. That's our good word for the day. And by the way, I'm sure that most of you in this audience have read the series of books called Left Behind. I forget how many different ones there were, but there was also the movie starring Kirk Cameron. It came out, I don't know, I think around 2000. That was the original Left Behind. We discovered last night there was a remake of Left Behind done in 2014 that stars Nicolas Cage. Nicolas Cage plays the part that Kirk Cameron played in the original. There's some subtle differences. Like in this version, they have smartphones. In the original, they didn't. So if you've never seen it, I recommend you watch it. And if you saw the original, watch the remake. I watched it last night. Me, my wife, my godson. It's a little family evening, watching some quality entertainment. Much unlike the stuff that Hollywood continues to grind out. The reason they grind it out is because we show up and we buy tickets, pay the cable bill, whatever the case may be. If you saw the Grammys, you may be blind, I don't know. Primetime TV, when children are watching, there was demonic worship. I know I've talked about this before, so I'm not going to climb up on a soapbox now. But there were some horrific things in the Grammy Awards that no child should ever be exposed to. Ever. So, it's the world we live in. We need God more today than we ever have. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.